Hi guys, I hope you're good. Okay, fine, now let us go into our video. Let's discuss the topic of the main difference between investing in the stock market and real estate. Which do you prefer? There are many things which have to be analyzed before making an investment. The thing about investing in the share market or real estate is tough for many youngsters. So in this video, we will discuss these things so that you will be given some guidance and come to a conclusion of your own. This video will help with those things, and let us see the pros and cons of these two investments. Stock market. The big plus point of the stock market is that you can invest as little as $100 or even less. But for beginners, it is advisable to go through SIP, that is, Systematic Investment Plan. So apart from this, with your mutual fund account, whenever you have extra money in your pocket, you can add to your shares as you wish, and stay invested for one day or for decades for the value to rise. When you buy good company shares, the shares tend to grow in course of time, and you will gain from that. Generally, all good stocks go up as time passes, except when the market falls, but after the market correction again it goes up and rises above your price. And whenever you want to liquidate, you can so easily sell the stocks that you own. The nature of the stock market or stocks is easily liquidable. The stock market has some cons also. That is, when the market is correcting or coming down, then the stock price will fall under. As an investor or as an individual investor, they tend to get worried and sell them when it comes down below a certain level than your expectations. Finding good stocks is another challenge for an individual. To do that, they have to spend a lot of time doing that. As an individual, the investor has to keep track of the stock performance on a regular basis, and sometimes you tend to sell your stock when it crosses 10% profit, but after selling the stock it may rise above 20% also. At that time you will feel that you shouldn't have sold, so finding the right time will become difficult for anybody. Sometimes the immediate liquidity nature of stocks makes an individual investor sell the stock at the time of urgency for cash. Thus, keeping the stock without selling becomes a difficult thing or decision. Finding a good expert is difficult for many people, and they avoid doing that. Please press the subscribe button. Investing in properties. There is a huge difference between buying a property and buying a share, because buying a share can be done with $100. But it is not so when it comes to property buying. But for many people, property buying is more an emotional decision than an investment. Your emotions should also have some value, so buying a property is not a bad idea. People think that they need a huge amount of money for buying a property, but they have to consider this. Banks tend to give you maximum loan at the minimum rate of interest for buying a property, whereas they will not give you any money at any interest rate for buying shares. There are banks which fund you almost 80 to 90% of the property value so that you can pay the balance in long EMI, and that too, when it comes to youngsters, they are providing a long-term repayment facility. If you have taken a loan with the tenure of 10 years, by completion of that tenure, the property value would have reached more than what you have paid. This will increase your savings by putting your investment in the EMI and not spending on unnecessary expenses, thus putting you in control. When selecting the property, you do not prefer downtown. Try to go a little bit outside the downtown so that the property value is a little bit or reasonably less compared to downtown. Now, when the surroundings of your property develop, like having new roads, malls and all that, your property value will get very well appreciated. If you want to discuss the cons of the investment in property, then there are a few things. You should have an initial amount of at least 10 to 20%, depending upon the place and country where you live, for getting a bank loan to buy a property. That amount you should be able to save over time and use it for the purchase of the property. Now, as a property owner, you have to pay taxes like property tax, etc., and maintain your property in a good manner. It will take your time to spend and work to be done. Any property doesn't have the liquidity nature of stock or stock market. Selling a property if you need takes time. But think of this as an advantage because your savings are protected from immediate decisions you make about your financial needs. Though share investments are easy, as humans, we tend to sell them when the market is in a fall before it recovers. This can make money in the long run, okay? But we also tend to sell at the time of any immediate needs, whereas real estate investing in land has some initial work to be done. However, you can easily avail loans from banks for the purchase of land or property, and you can get it for a comparatively lower interest rate than other products. It will give you a good amount of returns, though it takes a bit longer. Therefore, in my opinion, it is better to invest in real estate also, for a safer, long-term, and protective income or asset. But it doesn't mean that share investing is not good. Both have to be done simultaneously. Now it is up to you to make the decision. Please subscribe to this channel and click on the button. Please click like if you like. I think you would have enjoyed this video. Have a great day. Thanks for watching.